Good evening, everybody. This is Stefan Dote. It's June 4th, 2014. I'll start with our typical disclaimer. We are not financial brokers or advisors. All the material we present here tonight is for educational purposes only, and we do recommend you do your own due diligence before making any trading decisions or investments. So I'm just going to get right into it here tonight. Just hit some charts, some good-looking trades. I keep coming back to silver, and we added some more to our position today. Now we're averaged in at 18.39, so we're pretty close to that price right now. We went ahead and did some looking, and I think the next two stops below us are 17 and 16. And so we have an order in to purchase some more around 17.30. If I see it hit 17.50, I'm going to go ahead and keep adding. Take a look at a 2-year chart just to give you an idea of what this looks like here in the longer term. Pull up the weekly chart. As you can see, we were up here in the 30s. We've had this pretty good downtrend, and we've really been holding this floor here. So that's going back a whole year now, holding onto that floor. Normally, I do not like to average down when I'm trading stocks. I prefer to buy stocks when they're going up. They're going up for a reason, and they're going down for a reason. In this case here, if this is not a stock, it's really a commodity. It's really silver. So the chances of silver going to zero are not extremely high. Now you might invest your money and it might go down and you might have to hold on to it for quite a while to get your investment back. But the chances are, where we are in the economy, that silver is eventually going to go up. If we have any inflation, silver is used in all kinds of electronics. It's not just something people buy and put in the bank. It's actually used like copper and other materials of that nature. We're going to go back to a daily chart, and again, I'm just going to show you the difference between silver and gold, and why we own a little gold, but gold has a much further way to fall, a much further distance to go down. So it's a higher risk investment, in my opinion. If it does come down here to 115, we may go ahead and add to our very small position, but I still think the money lies in silver as a much better trade. Now, as for the market itself, go over here and pull up our daily chart again, and we're looking pretty good. If you go ahead and look at the S&P 500, you can see we have our targets drawn in here, and 1928 was our first target, and we pretty much hit that. I just about have to say on the nose today. Let's go ahead and draw that line out from where it is to here, and again, there's technical analysis at its best. We call that number way back here in March. It's now June, and we are sitting right on the number. It's incredible. Anyway, our next target to the upside is 1947, which we put on here in May. Now, part of the reasons I like these is it would surprise me to have a small pullback here, because we've hit the target, and I would be less frightened than if it just pulled back from the middle of nowhere. And I don't really get frightened anymore, honestly. It's just a word I'm using. But we like to use these targets as either a place to get out and take our money, or just to realize that, hey, maybe this thing is going to stop where it sits. To take a look at the semiconductors, we like to look at these because they support the NASDAQ and the technology stocks. And pretty much everything we have has semiconductors in it, from your toaster to your TV to your computer. It doesn't matter what it is. So you can see the semiconductors are making new highs here. And if we go ahead and pull up the QQQ, which is a proxy for the NASDAQ, let's go loading the data here. You can see that the NASDAQ has not quite, well, I guess it has made its highs, and it's really trying to break out of where it is. So this is going to be an interesting issue here to watch, since the S&P is hitting the target we have set for it. Will it push further up to the next level? Will it pull back? And anyway, it'll be interesting to watch the NASDAQ here in tandem. And I think the Dow also, I believe, was breaking out of a high area here. Yeah, so the Dow, it's pretty strong looking also. We'll hit a few industries. Today the auto industry was looking pretty good. And let's see, we have MGA, which we have a position in. And so we had a nice little 1.5% up today. I have a fundamental target here, the 125. I do believe we are going to see that 125, and we still have our MACD heading upward. And again, for those of you unfamiliar with the MACD, I'll be doing a video going over it, but essentially, when it's above the zero line, it's very positive, and when it's going up, that's positive, and when it's going down, obviously, it's a little bit of a negative. When it crosses this line, that's a sell signal. When it crosses that line, it's a buy signal. And I wouldn't exactly use it that way, but it's a general gauge of momentum, like a little speedometer. And you know, it's really pretty simple. When I make the video and explain it, I think you'll understand it quite well. And just one other stock in that arena was AutoZone. This is on our watch list, but we do not own it. It's been going very sideways. And I put a target back here in December from 560. So it's actually gone up 80 points since I put that target on it. But it's been going sideways, and I just like the MGM's chart better. And then if we look at the ETF cars, which I believe kind of represents car sales. Now this ties right into our manufacturing. Manufacturing being strong, there's going to be more money out there, more car sales hopefully, and more people buying cars. So right now we're getting near our top on this little ETF, you know, signifying cars. The next sector, just pull a couple of stocks in the chemical arena. PPG, they make some like auto paints, things of that nature. We do have a position in this, and we have had a breakout here a few days ago. My original target back here in March was 202, which, interestingly enough, in candle lingo, this would be a support area, the half world is large candle, which again is right on the target we had set. So another technical miracle. And then our second target up here, and this is a pretty technical target, it's up here at 209. So that's not very far away from where we're sitting now. And again, our MACD is poised, you know, to make a nice run up in that direction. And POL, I'm not exactly sure what they make, to be quite honest with you. Some kind of polymers, some kind of chemicals. Really doesn't matter. This chart's just incredible. I got a fundamental price target of 50 on this. We had a breakout from this level here at the 39.5 level, and that doesn't give us a huge target. We probably already hit that target, but 50 is in the cards. And just for fun, let's go ahead and look at the 2-year on this. And it's just a beautiful chart. There is just no stopping this thing. It's sitting right up on that 10-week moving average and just keeps going. And that's what we want to see. And that's, in this case, what we're getting. And if I didn't mention it, we do have a position in this stock. And here's one that's actually blown my mind this week, PL. It's just some kind of insurance company. But what you can't really tell from this chart is, and I was going to buy this, and we decided to hold off, and fundamentals weren't very good, so here is just such proof that fundamentals come second to technicals, because this just has a wonderful chart. And look at this, actually popped to here. Well, if you think that's much, this is where it closed today, all the way up here at 69. I mean, incredible. That's about 40% in 3 days on this stock. It was all over the chart. To buy this stock, let's take a look at a 2-year on this. And this is when you sort of kick yourself with, like, you know, why didn't I even put a little bit of money into it? But again, beautiful chart. I haven't gone to look at the news to see what drove it up, but obviously something was sending it up. So we can come back and just to see what we get for support, we have the insurance ETF, and that's breaking to new highs today. You know, ETFs aren't going to run 40% 3 days, but I like to see new highs. The market's making new highs. And this was definitely a breakout in this area here. If we used our measuring technique on this, or Fibonacci, probably my favorite for the most part. We grab that, we pull that down. Again, don't worry about what it is. So we've just about hit target number 1. So target number 2 is going to be a little over 65. And I'm not going to go into explaining Fibonacci. I'll make a video on that. But if you have a good software, you should have a Fibonacci tool. And you can do some reading on the man. It's basically just using his interesting math observation, I will call it. Now the biotechs, they're also moving up, which is good for us because we have been sitting on some. We have the Charles River Laboratories. We've been holding this for quite a while. And it's just making its move up. And not up huge, but it's trying to get back above those moving averages. And BIIB, which has actually gotten back above its moving averages here. And so we like that. We like to see it get back up into its highs. We own both of these, both CRL and BIIB. And then we're going to look at SHPG. This is an Irish pharmaceutical company. We own this also. It's coming up near its highs. The volume is about average. And we have our MACD crossing this line and trying to come up. It's above the 0 line. So if you remember, or maybe not, this was a while ago, we had a full position in this. And when we get this run up to here, we went ahead and sold half our position. We held on to the other half, we let it ride down, and now it's back up to we originally sold the first half. So case in point is we took profit after we had this run here. We've got this nice run and said, hey, we have some money, took our profit, left half on the table, and we're going to let the rest of that ride and see what happens. It's potentially from here, it could go up to, if it breaks this level, it could go up to 195 up in here. So that should be interesting. And again, we got one more to look at for biotech, which is CELG, big company, everybody loves it. It was a little overvalued in my opinion earlier this year, but it has broken back up above its moving averages. And not much else to say about that one, really. We look at the ETF for biotech. There's one, BIIB, which is broken above its averages. That looks a lot like our stock, CRL, almost identical. And there's one more ETF, IBB, and that looks almost identical. This, and again, these ETFs are based on a basket of stocks, not just the buying and selling per se of people, but there's probably 20 or 30 stocks in a basket, and the relationship of the price of the ETF is related to the buying and selling of those stocks. Today we added 2 new stocks to our watch list, which will not be showing up on the website yet. We do that watch list usually every couple of weeks. So if you want to add this in, FIS, it looks like a bumpy chart here, but when you pull this up on the 2-year chart, it's really quite a nice chart. It had a little squeeze here, which is really a buying opportunity. It's broken back above and could be ready to go. We'll see what happens with that one. We're looking at taking a position in that. I also like it here. It's trying to push off. These moving averages haven't crossed. So we'd probably start small and leg into a bigger position. And we added HXL. Very sideways. This is more of just a trading stock. Just wanted to show it to you. We just threw it on the list because we think there'll probably be a couple of pops on it. We've traded this before and done okay. And see, in the world of retail, you have XRT, which is the retail ETF. And so that's very sideways. But again, we're coming back to the manufacturing data, and we're hoping that manufacturing is going to continue to be strong, which is going to filter down into the economy. People are going to feel better about their jobs, and they're going to be spending some money. Now, personally, I don't trade a lot of retail stocks, but I do like to trade Ross, which has been going quite sideways. And we're looking for it to break back up in here. We may take a position. This is one of the first stocks that frequently moves when people get a little extra cash in their pocket. One of my other favorite retail stocks, believe it or not, is Williams-Sonoma. It seems to hold up in any economy. I'm not exactly sure why, but it does pretty well, and it's had some real gapping. It's kind of all over the place. So, unless you're kind of an experienced trader, you may want to stay away from trading this one. I wouldn't call this an investment I'd want to make. This is more of a trading stock. On our watch list, we have NMC. Now let's look at this on the 2-year. And I know I may be speaking a little fast this evening, but I want to get through all these stocks. This is a beautiful chart. I mean, I say that with love in my heart. It's just beautiful. And here's a nice little hammer and another little hammer type thing. Just keeps running up. It's, run up quite a bit. So if we go back and look on the daily chart, I like to have charts when I'm investing, and when I say investing, I mean I'm holding something, for more than a week or two. That the 2-year chart looks like that. It's just going up at that nice, angle. and then I'll use a daily chart to get myself into it. And we're having a breakout today. You can see it right there. I'm going to go ahead and pull a target on this today. You guys, you can all watch. We'll see if it hits it. How close we come. We'll pull this down. We'll pull this down to here, about there. So we'll put 2 targets on this right now. We're up at 1. Which isn't very high up. That'll get hit easy. I wouldn't even be impressed with that. There's a second target up there, but there's actually a 3rd target here, and I have to go out further to find that, which is way up there. Okay. So this is, I'm going to put our other target in here. Now this last target is technical measuring. I just programmed the Fibonacci to do it. Basically the channel here, the distance from the high to this low, this channel, you just add that to the breakout, and that is your target. I'm going to go ahead and delete this. I'm going to take this first one out. I don't think we need that. We're pretty sure it's going to hit that. We'll do show value. So we have 52, and we'll show this value at 53.6. So about 6%. This is not the fastest moving stock, but you can probably feel safe putting your money in there. I mean, a good support level is down here at 47, 4 points. So not a bad looking trade. We ourselves may go ahead and jump on into this, see what it looks like. Volume here has been good. It's breaking above the average. And finally, we're going to have a little candle lesson. Since we are trading candles, we're going to go ahead and give a lesson in trading candles. And for all of you out there who are unfamiliar with candles, that's fine. Again, just watch, and eventually it will all sink in. And this little lesson here has to do with momentum. But there's a lot of beautiful candles, candle patterns here on this chart. I'm going to squeeze right in here. So we come down, and this would be a piercing line where we gap down and we go up and close more than 50% above this candle. So basically we took a lot of what the sellers sold off this day, we took it back the next day. So that's a bullish candle, and then a close above this line is an entry point. So now we're going ahead and running up, running up, running up, running up. Okay, now we're getting some small candles, so momentum is slowing. We get a big candle, and then we get a harami. So, okay, we're getting some momentum signals. This is slowing down. Get another decent-sized candle, another decent-sized candle. Now, then we get a harami. So now we have another bearish sign here. But notice this. We have 1, 2, 3, 4, 5 candles, 5, that all fit inside the body of this one candle. So there's a lot of consolidation going on in there in a very tight range. So that's kind of building up like a pressure cooker. And then we get our down candle here with a little tail on top. So another bearish sign. And we get, it could be a shooting star, but it's definitely another harami. You know, an uptrend, that would be a bearish signal. And then over here we have another harami. So we get a piercing line, very easy to see. Harami, very easy to see. Harami, very easy to see. Waning momentum. Harami, and another harami, very easy to see. And this could really also be a bullish engulfing, bearish engulfing on this candle. But, a lot of signs of slowing momentum and some bearish candles. Now, with an uptrend like this, that doesn't mean it's going down, but also notice this MACD is going down while this is going up. Okay, so what we have here in two spots, this is very important, is a divergence. We have up movement in this stock while the MACD is moving down. This is what we call kind of, or what I would call under the tape. So this is what we're visually seeing, but this is happening behind the scenes. Now, over here we have a double top with a divergence. We have this high area in here. And then it comes up and makes this second high area in here. Now look at the MACD here is higher than it is here. There's that divergence in there. And basically, you know, the MACD is a combination of moving averages. And an esoteric way to explain it, which is kind of how I think about it, is if a stock is trading in a range, we'll just say it's trading from 50 to 52, and most of the trading is going off at the $52 level. So it's in this range, 50 to 52. Most of the buying is happening closer to 52. Well, then you have a high MACD. And you come up here to your other level, and let's say the trading is going on from 54 to 56. You know, it's just trading in this range. But most of the trades are going off at 54. So the trades are going off relatively lower. It's a higher price. However, in relationship to its movements, it's at the lower end. So the 50 to 52, it's going off at the high end, and the 54 to 56, it's trading at the low end. So stock price is higher, but people are willing to pay less within the range it's trading in. It's weakness showing, weakness is coming in. You can see, you know, the strong candles and the weakening candles, but you know, this is just a wonderful trade. These double tops, double bottoms, these divergences, I, you know, prefer to trade them. If we're in an uptrend, I prefer to trade a, you know, double bottom, which I'm not even sure which chart would have one, but this is a beautiful lesson for candles and the MACD and how to use them. Let's just take a 2-year look at this chart. So it does a lot of sideways movements, but it's quite high. I mean, this is as high as it's ever been off this 40-week moving average. So, you know, if we're to pull back a few points down into here is you know, not out of the question at all. And, you know, but you want to look at this. I mean, do you really want to short something that's going up like that? You know, if you're into options, well, this stock is probably a good option trade, but it'd be more of a time to sell options than anything. But anyway, listen to this part of the recording again. I couldn't really even find a better way to show you how to use candles, momentum with the MACD, and you just really couldn't. And so here's a double bottom right here. Even though the stock's in the sideways range, we'll go ahead and just say, hey, this stock has actually been in an uptrend. Get back to where I was. So we have our bottom here, and we have it, well, I'm sorry, we have our bottom here, and our MACD way down here on the bottom. Comes up, makes another bottom, and look at the MACD is much higher. Again, showing that people in this trading range are willing to buy at the top end of the market, whereas in this trading range, people are willing to buy at the bottom end of the market. So this is a seller's market. This is a buyer's market. If you think about it, sort of like buying a house. There's buyer's markets and there's seller's markets. And if you were to have something where this was lower and this was lower than that, then that's just really a confirmation of a down move. So before I go on too long, I can't tell you what kind of excellent information that is. I personally get excited by this, which probably seems a little bit crazy, but traders are like that. And anyway, I hope you have a good night. I hope you can make some money, and hope we'll see you back here again. Come visit us at tradingcandles.com. And again, thank you for coming.